All right, guys, back to work. Back to work. CPI is behind us. What a fantastic day today. We talked about this last night, that big move down, that two-legged pullback, that retest of that low. Now it seems like everybody's scrambling right now again on that CPI squeeze on Wednesday. I have a number of trades I'm tracking for tomorrow. By the time we're done tonight, you'll have an easy roadmap to make some money on Wednesday as well. Before we jump in, though, and talk my favorite trades to capitalize on what might be a big CPI squeeze tomorrow, before we dive in, though, make sure you subscribe to the channel. I don't want you to miss tomorrow night's videos. Hit that subscribe button for me. If you like these lessons, if you enjoy these videos, do me a favor here tonight. Hit that like button for me. Give me a shout out in the comment section below. Thank you so much for tuning in, sticking around. I'm late here tonight. I had some technical issues on the video, but as always, the show must go on. Now, charts are all ready for us here tonight. NASDAQ triple Qs are ready. E-mini and the SPY is ready. Boy, markets have been going up and up and up and up for the past, it seems like forever. We finally have this really nice, deep pullback. And man, oh man, we get channel support on the NASDAQ and the S&P. We got pendulum swing support on the NASDAQ and the S&P. This seems like the perfect spot to be a buyer right now. Could be a perfect spot for a big CPI squeeze on Wednesday. The challenge we have right now, though, is the strength of that move down, right? That move down today was very, very strong. That tells us that the game for tomorrow, the plan for tomorrow will probably be to trap in some of these sellers who think this is a reversal and squeeze their stops on Wednesday morning. We'll talk about how to time the entries, how to trap in the sellers and squeeze those stops as we go deeper into the video. Before we talk entry tactics for tomorrow, though, let's look at our schedule. There are two things you want to be aware of for tomorrow. Tomorrow, of course, is a Wednesday. Two things to be aware of. Now, we heard from CPI this morning, right? You know this already. The CPI came out harder than expected, and now it looks like the first rate cut will probably be end of the summer, early fall. Now, as we go forward, we have to think markets are going to be obsessed with Fed speakers. We got Goolsbee tomorrow. We got Michael Barr tomorrow afternoon. These Fed speakers are always popping up left and right, getting in front of microphones. So we'll definitely be listening in tomorrow morning in our trade room. That'll be a bit of a moving target tomorrow, next few days, but it's definitely something I'm watching tomorrow in our trade room. And then tomorrow night, I'm going to be out of the office tomorrow night. There'll be no video newsletter tomorrow night. I hate to leave you guys hanging, but every once in a while, they let me out of my cage here at School of Trade headquarters. So no video newsletter tomorrow night. We'll come back on Thursday night and get ready for Friday's trading session. So keep it in mind, Fed speakers, now CPI is behind us. Everyone's obsessed with when will that first rate cut be later on in the year. We're watching closely for Fed speakers tomorrow to tip us off to when that might be. And again, no video tomorrow night, but don't you worry, we'll be in our trade room the rest of the week like always. Now back to our charts though, because of course the money is made on the charts. Let's now dive in and talk my favorite entries for tomorrow. We'll begin on the S&P and the SPY. We'll wrap up tonight, of course, on the NASDAQ and the triple Qs. As I mentioned in the intro, markets are bullish. This seems like the perfect spot to buy the dip. But the hard part right now is all of that bearish momentum we see coming off of that high. Timing the entries tomorrow could be a little bit of a challenge for us, but let's drill down. Let's check our tick charts for tomorrow, because tick charts, they usually give us a lot more clues we can use to time the best entries. This, of course, is a 7,000 tick chart on the E-mini. We'll grab one on the NASDAQ here as well. There are really three important clues I'm seeing in the tick charts right now that are kind of tipping me off to where I think the best entries and exits will be for tomorrow. First things first is the news spike. Now, anytime we see, and we talk a lot about this in our free video classes, anytime we see a strong spike like this off that CPI report, I can take the size of that news spike. Then once we know how big the deep pullback is, we can then go out and project that down, and that gives us our measured move. We talked a lot about this morning in the morning trade room. Now, why is it important? Well, usually those news spike measured moves, usually that's about as far as these things go. Remember, we're not an overall bear market, we're an overall bull market, right? So a big news spike down, this seems to be a likely bottom for us at this point on the S&P and also on the NASDAQ, you'll see here in a moment. That's one big clue. The second big clue is a strong move down. This measured move news spike had some punch to it. That's a pretty strong move. Why is is that important? Because anytime we see a strong move in one direction, we expect a pullback and a retest of that low. Now, the bears may not get a retest of that low, but they're going to probably try. There's a good chance they'll try to retest that low, and if we're lucky, well, another one of those double bottom reversals we talked about in last night's video. Now, third clue. The third clue is a very important clue, and that, of course, is this trading range right in the middle of that chart. Strong move down. We chopped on a trading range. Got a beautiful bear trap reversal this morning in our trade room. Bottom line, though, is that this is a trading range. We now measure the amount below the range. We project that going higher above the range right now. And that basically tells us exactly where these buyers want to go. They want to rotate off that low, take out some of these highs overhead, but ultimately, they're going to want to take that 50-11, 50-12 area, that pendulum swing going higher. This rotation aspect is a very big clue. Help us time some entries here for tomorrow. So put all of this together, right? Put all this together. We know right now it's an overall bull market. We've got a lot of bearish momentum. We're expecting these bears to try to retest the low. I love the idea of some bear traps down there to buy back up. We'll talk about that, how to time the entry on that in a moment. But at the same time, though, we may not get that run lower. We may not get that strong run lower. This thing may end up squeezing here and take out that pendulum swing. So as we go deeper into the video tonight, we'll talk about a game plan if it does end up squeezing higher, because I'll tell you, there could be some easy money to make up there, but you could also get caught and lose money up there too. We'll talk about why I say that, and I'll give you guys an easy roadmap to make some money no matter what direction this thing goes here for tomorrow. Now, my favorite trade for this is definitely going to be that retest of that low and back up. There are three variations of that pattern. Remember, I don't have a crystal ball. I don't know what will happen tomorrow. What I do know, though, is in situations like this, we get these big bounces off these measured moves like this, usually what that means is a two-legged pullback is usually the best entry for this. Now, what's a two-legged pullback? In my free video class, we talk a lot about measured moves, right? Measured moves are a 100% extension. I don't know how big the leg will be right now, but the idea is simple. Get under the moving average and think about a measured move going lower, okay? That will give us the general area to look for the entry. Now, timing the entry. Remember, I don't like to pick tops and bottoms, right? A lot of times it'll keep on going. So rather than trying to pick the bottom on that, what I'll do is I'm going to wait for the bears to come in, let them try to short this thing again into that two-legged pullback. And once those bears commit off that 21 moving average, this yellow line right there is the 21 EMA, in case you're watching for the first time right now. But if those bears come in and they foolishly short right there, can we all agree that's a horrible spot to sell short? Right? We're right around that low overall bull market, right? Horrible spot to sell short. If I can get bears to chase this thing going lower, now I can use the stops, right? And squeeze those stops. Again, respect the bear momentum, but stay focused on the long side right now and use stops to fuel that move, right? That will look for either a failure into pullback combination. Again, this will make a lot of sense if you take my free video classes, a failure pattern into pullback combination. Or oftentimes what happens is these failure patterns, they fool so many people, it squeezes up and we want to buy higher. Right? We want to buy that technical bear trap going higher. Right now, look how I draw that, right? It's a higher high in price and a move right below that low. All right. So again, think about this now. The bears want to retest that low. They may not be successful, but the goal is to get this two-legged pullback, trap those rookies. We use some rookies right there. Trap rookies in, and then grab that pullback or grab that technical bear trap entry. And again, we know where the market wants to go. It wants to take out that pendulum swing on the side, leave a runner for that pendulum swing going higher here. So I love the idea of that two-legged pullback, trap the bears in. Now, you know, the market has a mind of its own sometimes, right? We may not get that ideal entry pattern. We may only get a shallow pullback trap. A shallow pullback, what? A shallow pullback trap. If I draw a trend line off this high right here and bring it down to that low, okay? We may only get a shallow pullback. We may not get that two-legged pullback. Okay? What's the plan to buy a shallow pullback? What's the problem? To buy a shallow pullback, I don't want to buy high. I want to buy as low as I can. Whenever our challenge is buying high, what you do is you want to buy a bear trap. I call these shallow pullback traps. Okay? So if all we do is in a shallow pullback to lower that channel, think about once again, bears try once, bears try twice, it's a higher high in price and a technical bear trap below that low. And when I say technical bear trap, I mean a difference between a bear trap or a seller failure, right? Which is oftentimes called a bear trap as well, right? A failure pattern is a different entry pattern, right, than a technical bear trap. Let's slow down for a second. Because I know that most of you guys and gals watching right now, you know bear traps, you know failures, you know range rotation. But listen, if you're watching for the first time right now, this could be a brand new language for you. This might be way over your head right now. But don't you worry. I teach all of these patterns, two-legged pullbacks, bear traps, failure patterns, pullback combinations. I have hundreds of examples of these all taught in our free video classes. I'll put a link up top here for you. Don't you worry, I'll hook you up. I'll put a link up top there. Grab that link that popped up. Take that free video course because the strategy you're going to learn in that video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then once you know where to look for the entries, then I'll help you time the perfect entry with failures, bear traps, pullback combinations, 4x favorite entry patterns. I teach everything you need in that free video class. Guys, the markets are way too good right now not to be making consistent money. If you're struggling to qualify for a prop account, if you're still missing the best trades each day, hit that link up top there. Take that free course. It'll give you an easy roadmap so you always know where to look for the best winners each day. And also keep in mind too, you can't grab the link up top there. I'll put all the important links we talk about tonight in the description of the YouTube video. Put the free class links down there. We trade together every morning in our morning trade room. I'll put my membership links in the description as well. And also to my Twitter throughout the day. If you're on Twitter, my handle down there for you. Give me a follow if you're on Twitter, and I'll see you some updates throughout the day. All right, guys? So again, I like the idea of that two-legged pullback, trap those bears in back up again. But if all we get is that shallow pullback, keep buying as low as you can, those higher highs in price, and that technical bear trap, right, going higher. Now, one of my favorite trades here for tomorrow is because we know we get all of that momentum, if they do go back and retest that low, now think about a double bottom reversal. We saw a beautiful example of that today in the trade room on the S&P. Strong run down, two-legged pullback, retest of that low, trap those bears in. That is a smaller example of exactly what I want to see over here. So if we're lucky tomorrow, the bears will take this back down to that low. And think about this. Anyone who sold on that pullback right there, where's their profit target? At that low. So it's safe to say, can we all agree that the sellers become buyers down here? Right? The sellers who sold short up here, they become buyers at that low. Now, if we go back and retest that low, and the bears come in, rookie bears, right? These are not professionals down here. And they sell a couple times. One try, two try. Remember, we don't pick tops and bottoms, right? I don't know. It may keep on going, right? It may keep on going. I don't know. All right, I don't have a crystal ball. What I do know, though, is once they retest that low and I start seeing rookies commit down here, I got you, right? I know exactly now where your stops are. I know exactly where your pain is. And I love to get these failures. This would be a two-try failure. We teach this, of course, in the free video classes, a two-try failure into it'll squeeze going higher. The market wants to go right back, take out that high. Don't chase after it. Look for that technical bear trap again. It's a higher high in price. We're right below that low. That's the entry we look for on the add-on. All right. So again, hopefully this would be a great trade for tomorrow. Roll it over, retest that low. This is a scenario where, as my first mentor would always say, everyone is a buyer. Right? Think about that. If those rookies, if they get stopped out right there, everyone's a buyer. Why? Because anybody who sold up here, they're taking their profit at that low. They're buying their way out. Buyers are going to buy low because our overall 60-minute chart is bullish. And then once those rookies, once they get stopped out, bam, everyone becomes a buyer. It's tough to lose money on those double bottom reversals. Again, it's an overall bull market. It's not a bear market. I love the idea of that two-try failure. And then as we go higher, if we're lucky, we'll draw a trend line off the highs. bring it down to that low, and my goodness, that is a gorgeous, it's tough to lose money on a trade like that. It really is, because you're buying low, you haven't completed the objective back to the high, and you better leave that runner, right? Because you know where this thing wants to squeeze off that high. I love the idea of that double bottom reversal. But let's face it, right? I may not get the entry right there. I may not get it, right? The market may roll over. It may boing right off that low. And what do you do in those cases, in those situations? A V bottom, if it bounced off that low because to grind higher, right when that voice in your head says, come on, man, get in. You know what I'm talking about, right? Right when that voice says you're missing it, do not chase after this. Remember, you want to buy as low as you can because we're so bearish in the short term. I want to be a buyer because we're overall bullish, but we're so bearish in the short term, we don't want to buy as it goes higher. These are easy. Mark off that high, mark off that low, and what do we say? First test is the best test. Now, this could be any of the entry patterns you guys are learning in our free video course. For example, I love traps, right? Get underneath prior swings. I think that's usually where the best entries are going to be. But sometimes there is no prior swing right there. Sometimes all we can do is get below the 21 moving average, get the bears coming in, try to short, and we got them right again, right? Trapped in, use a failure pattern, a failure into pullback, a failure into bear trap. And again, we know where this thing wants to go. The bottom line, though, is I want to buy off the low of that channel, right? So don't chase it. And for me personally, in my experience, once that voice in my head says, come on, man, you're missing it, that's exactly when I want to sit tight, wait for that pullback, go that first test off that low, and let that thing run, right? Let that thing run tomorrow up around that pendulum swing. All right, guys? That's the game plan. That's the game plan if we go lower. All right, now let's talk about if we go higher here. Because going higher, if you play our cards right, there can be some pretty easy money up there. But if you chase that thing going higher, it'll be easy to lose money up there as well. Let's go to the NASDAQ here now. The NASDAQ's feeling a bit lonely over here. I can see it's feeling lonely over here now on the NQ. The NASDAQ seems like the perfect spot right now to be a buyer. Again, we're so bullish overall. I mean, look at the size. This move is so high up right now. It makes perfect sense. We're getting a nice deep correction. And I can't help but notice it's almost identical to the previous correction we saw back in late January, right, early February. The bottom line is we're in a perfect spot right now. Channel location is great. Right, the channel is great. This range, that pendulum swing is perfect. We're right back to a prior trading range for a breakout pullback. It seems like the perfect spot to be a buyer. But again, the problem is this is a very strong bear move down. So let's drill down now to our tick charts. Again, tick charts are going to make everything easier. This is a 4,000 tick chart. You can see there, upper left-hand corner again, the 21 EMA. Now, just like on the S&P, whenever we get a strong news spike, right, that initial shot going lower, we take that range, the size of that spike. Once we know how deep the pullback is, we then measure off that pullback, and that gives you now your measured move news spike. Usually, in most cases, that's our bottom. Right? Usually that's our bottom. Now, of course, anything can happen tomorrow, but usually that's our bottom once we hit that new spike measured move. And come on, look at this gorgeous. If you watched last night's video, I know a lot of you guys made money on this morning, so well done on that. That big move down, that two-legged pullback, that retest of that low, right? Trap those bears in, and now where's the market want to go? You know this. It wants to go back and take out that high right there. Right? So now we know where the buyers want to go. One more clue here. This range. Now there's actually two ranges on this chart right now. There's a range right there and a range right here. The most recent range is always the more important range. Okay, recency is a very big part of trading. The most recent range is the most important range. Why is it important? Well, because now the amount we go below, the amount we go above, right? That ranges love to rotate. The only challenge we have right now is the underbelly of that range may act as a bit of resistance. Okay. Luckily, though, we had a game plan for that, right? We know how to trade that two-legged pullback back up. We know how to trade the double bottom back up. We know how to trade that. All right. However, if this thing begins to squeeze, if we start squeezing and running up and taking out that pendulum swing, let's now talk about how we trade that, right? Because if you don't play it correctly, you can easily chase it, lose money, and, well, kind of shoot yourself in the foot at the same time. If we end up going higher, what's my problem? What's my problem if we go higher? My problem is I don't want to buy high. Why? Because we're running right into overhead resistance. Again, we're overall bullish, but a very strong bear move down. I have to expect above these highs, who's waiting up there? Bears, right? Bears are waiting up there. I have to expect them to short this thing back down again. In order for me to absorb those bears, this is where bear traps come in. A technical bear trap. It's a higher high in price and a move right below that low, right? That technical bear trap as we go. I want to buy as low as I can. So as we go higher, buy bear traps if this does continue to squeeze going higher. Now think about this. We may get that bear trap. We may get that run going higher. And now what, right? Now what? Now we don't want to chase after it, right? We don't want to chase it as it goes higher. What you have to understand is that when markets squeeze like this, these are bears getting out. These are sellers getting out of the way. That's what causes the market to run higher. Eventually, buyers are going to want to buy low, right? Eventually, buyers will come in and go, okay, I'm not going to buy way up here, but I'll buy nice and low. This is where that two-legged pullback comes in handy. Right? Now, as we go higher, now think about that two-legged pullback again, right? Under the moving average, think about measured move, right? A little bit more than a measured move. That will give the general area. Okay, if we're lucky, we'll get a pullback here, a channel. Off that high, right? Off that low, and we'll get that two-legged pullback around the low of that channel, around prior highs like that, right? Makes sense? Again, I don't want to buy high after it squeezes. Eventually, buyers will want to come back in this market and they want to buy as low as they can. Get that two-legged pullback. Remember, don't pick the bottom. Okay, you're better than that. Don't pick the bottom. Wait now for this to pull back to that 21 moving average and use that failure into pullback combination, right? Or that failure into bear trap combination. A lot of examples of those, right? Hundreds of examples of those inside the free video course. All right. But again, if we do pop up, don't chase it. Two-legged pullback into support, right? Trap those bears under the moving average, squeeze those stops, and then maybe it's a pullback combo or a bear trap combo. Remember, higher high in price and that trap below that low, right? That is that two-legged pullback so we don't buy too high up there. Okay. The last one is a pop and grind. Okay, sometimes what happens is, sometimes the market pops up like this and the bears can smell this, right? The bears know they're on the wrong side of the market and they get out of the way and price begins to grind and grind and grind going higher. Okay, whenever market grinds like that, whenever markets grind like that, what that means is the other side of the market has basically bailed on it. Now again, remember, if the bears walk away, the market will gravitate going higher because there's nobody else to sell against it. This is not buyers buying right now. These are bears getting out. It's very important to understand that very important difference there, right? So buyers want to buy low. When they come back into the market, professional buyers draw the trend off the high, bring it back off that low. Again, look left, prior swing, right? Prior swing. These are where traps live. Okay, this is where money lives, if you want my opinion, right? That's where money lives right there. The bottom line, though, is get underneath that moving average. Again, don't buy it high, under that moving average, under a swing for a bear trap. Trap those bears in under the moving average for a failure pattern, failure pullback combo, failure bear trap combo, first test off the low of that channel. All right, guys? So if it starts popping up and grinding higher, don't chase after it, right? Wait for that pullback. Your patience be rewarded. As traders, we get paid to wait. All right, guys? I'll tell you, a beautiful day today. One of those days you love being a trader. It was great seeing all the posts on social media today, people making money with the game plan we talked about last night. That's my game plan for tomorrow. Now, 8 o'clock Eastern time in our trade room. I can't think of any better way to learn to trade than come out and do it with me every morning. Tomorrow morning, 8 o'clock Eastern time, all students in the morning room. I'll put all the important links tonight, put the free class links, our trade room membership links. I'll put all the Twitter stuff, description there below. So don't be a stranger. Hit the links. I'll see you guys sometime soon in the morning room. Any questions? Any trouble getting access to our video classes? Don't be a stranger. Call the office. Shoot me an email. Use live chat. If you guys have questions or trouble getting access to our video classes, I'm always here to help out every step of the process. All right, guys, thank you so much for sticking around tonight. I'm a bit late on the video tonight. Had some technical difficulties, but as always, we finish up the day strong. Now get out of here. Enjoy your evening. I'll see you guys tomorrow morning. Same time, same place. Unfortunately, tomorrow night, no video tomorrow night. We'll come back on Thursday night, and we'll resume our normal schedule. Guys, thanks for being here. My name is Joseph. Be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.